Hi, this is Kirk with Forex Strategy Secrets. Today we're going to talk about day trading versus swing trading versus position trading. Now this is part 2 of a 3-part series. So we're going to be concentrating on swing trading. Now swing trading is typically a short to intermediate term trading system, and it lasts from about 1 to 3 days. Now traders who swing trade typically look for trend reversals or retracements for their entry and exit points. Now the time frames involved are usually the 4-hour, 1 hour, 30-minute. At least that's the area that we concentrate on when we're swing trading. So I'm going to give you a little example of this chart that we have up here. This is on a 4-hour chart, and you can see that the market had some moves. It looked like it was pretty choppy, but take in consideration that this moved 150 pips on a 4-hour chart. So this was during the European session when this little move started here, and it continued, so you could have taken some out in the US session also. Right here again it turned and went up. This is starting the European session again and continued through the US session, and that was close to 150 to 200 pips depending on where you got out up in this area. Then it rested for a while. Then this is starting in the US session, and we had nice moves going down here for about 130 pips. So you can see some ups and downs. Now this is going to take 1 or 2 days. It's not going to take months. Typically the swing trading, yes, it can go up to months, but generally it's going to be just a few days. Now let's look at a 1-hour chart at the same time. So we'll leave this vertical line right here, and then we're going to look at the 1 hour. Okay, here's what the 1-hour chart did. Okay, you can see where it moved up quite a bit on the 4-hour, and the 1 hour had some pretty decent moves. I'll scroll across a little bit more, and you can see several places. This is where the other part we talked about came down on the European session and the US session. So each session has different moves at different times. Now let's actually go to the 30-minute. So on a 30-minute, this is that choppy area that we saw, and so there was a small trade here for 40-50 pips on the 30-minute. See how nice that was on that 30-minute chart? We saw what the 1 hour was doing. This is where it was consolidating for a while, and you can see this is where the European session started and the US session continued. So you can see that's basically what swing trading is, and so it's usually going to be 2 or 3 days, 1 to 2 or 3 days, but it can go up to as high as a month. Reasons that people might want to trade the swing trading style is there's less time involved in actively trading. You don't have to be in front of the computer as much because you're looking at larger time frames. Worst case scenario, you'd have to come back and look at it once every 30 minutes, but if you had alerts going off, you wouldn't even have to come back that often. So if you're trading the 1 hour or the 4-hour charts, you can see that you have plenty of time to analyze and pull the trigger. It's not like you have to make that quick decision. It's not necessary so that you have to babysit the charts. And you can work this around a full-time job. Now, a couple of hours a day, maybe even an hour a day, might be sufficient depending on which time frame you're using. If it's a 31 hour, you're going to have to spend maybe a couple hours. If you spend most of your effort on the 4-hour, then you just might be down to an hour or so. There's going to be less stress in this trading style rather than the day trading. You have a higher success rate than when you're day trading, because the market will move, and if it goes against you, if you're in it properly, which you should be able to do, then the trade will come back in your favor, even though it does do a small retracement. And so the market has more room to move and to recover from little news announcements. Now, some reasons why traders may not want to trade this style. Now, some of the things would be reasons or skills you have to develop, and that may be why some people don't want to do it, because they have to learn too much. Well, if they don't learn these things, they're not going to be successful traders. So you have to learn to move to smaller time frames. You got to get out of the 30, 15, 5 range, and if the 30 is your smallest, but usually the 4-hour and 1 hour, and you can develop emotional attachments to trades. So if you got a trade that's been on for 8, 12 hours, or maybe even 24 to 36 hours, you may become attached to it and then not be willing to get out when the market says that the move is over. And here's one thing that a lot of people may not want to do. You have to develop more patience and discipline. And so if you don't have that capability, maybe you want to stick on day trading, but there again, you're not going to be making the big bucks. And you need to learn how to keep your emotions in check. You look right here, this little area right here, you got in, and the market came back and retraced against you. It went back against you about 50 pips if you were in that trade. But if you trust your indicators, then you could have taken out over 100 pips on that move. Now you'll need to develop better money management skills. And you have to get used to setting larger stop losses and larger take profits. If they're going to be out instead of 20, 30 pips, they might be 80 to 100 pips on your stop loss. And your take profits may be out 200 or 300 pips. And then you need to get used to trading more currency pairs. Not just sticking with the one, maybe two, but trading 8 or 10 currency pairs, having 4 to 6 trades on at a time. So these are things that maybe you wouldn't want to do. But you'll find that if the more trades you have on, if you've entered them properly and had the discipline and patience to enter them, that if you do have one losing trade, the positive trades will way out perform the losing trade. So in summary, you'll be trading with more currencies and you'll have more trades on at one time, but it will give you a better opportunity to make more money. And you'll need to have a swing trading as part of your trading strategy or skills, so that you will be able to trade on a full-time basis and make a living. But you can make a living doing the swing trading method if you develop all the skills and the patience to handle it. So that's a little summary on the swing trading method, and that's what we encourage people to do. Get some experience maybe on the day trading method, move up to the swing trading method or the day trading method, which we'll talk about in section 3 of this series.